Just recently, I made an investment decision to buy some shares in Baidu. And what I'm going to do here is just share with you sort of my thought process that I took into ultimately leading to my decision to buy shares, buy stock in Baidu. So usually every time I'm evaluating a stock, I try to answer some core questions about the business. So I'm just essentially going to pick those off right now. So the first question I always ask myself when I'm looking at a company, looking at a stock is, hey, what do they do? What is their value proposition? What do they sell? What product services do they sell? With respect to Baidu, essentially what they are is in their initial iteration, they were essentially and still are a search engine, and very much similar to what Google is, except their focus is China. They're essentially only operate in China, and the fact of the matter is they are the default search engine in China. And so they are dominant. And when you're dealing with a market with 1 billion people, they are the dominant information or data aggregators in China. That's originally what Baidu was all about. But over the last while, they've been kind of pivoting and morphing into a different type of business, and that's becoming more focused into AI in terms of developing software that essentially powers products and services, and it's more specifically into self-driving cars. They basically have taken that data that they've aggregated, all this data that they have on China, and essentially created a whole suite of products around it to develop AI kind of tools. They've developed a series of tools. One of the ones the most common are Apollo, which is a suite of tools, AI tools, and essentially they're creating an ecosystem for AI. And they've also developed some other kind of tools, which is called Doer, which is almost like the equivalent, like the Alexa, Amazon Alexa, sort of voice command-based kind of operating system. And they also have a streaming service, which is just going to be IPOing. Quite sure. The thing about Baidu, what's interesting about them, makes them an interesting opportunity, is they're really pushing into AI. And one of the things they're pushing into AI, reason why they're pushing into AI, is the government wants to be a leader by 2030. And usually when the government is pretty focused on a task, in China they really go and shoot for it. So that's kind of what they do. They're a search engine. They aggregate all kinds of information, much in the same spirit as Google. They sell advertising. That's where they make their bread and butter. But now they're kind of pivoting into other areas. They're really getting into the higher value, really going up the value chain in terms of the products that they're going to be selling. Who do they compete with? Who are their main competitors? Well, in China, their main competitors are, Tencent, Alibaba, and those are their big competitors. But with respect to this whole AI element, you got companies like they're competing against the auto companies like Tesla, BlackBerry, and essentially also Google, more specifically, their Waymo. And so there's a lot of competition right now in this AI space, and because it's just so new, and somebody is just trying to take a leadership position, and so Baidu sees itself as a capability of being in that leadership space. Who are their main customers? As I said, they're really China focused, and they're trying to get more mobile users in the mobile space. They've actually lagged behind. They've been more specifically a desktop kind of search engine, but Tencent and Alibaba really took the lead in terms of mobile technology and mobile interfaces, and so they've been playing some catch up, but they're starting to catch up. So they're kind of behind in the search engine side, but they're more focused on the China market. But they're, and that's a big reason why they're trying to pivot towards AI, because it also they're trying to get outside China and have a more global reach. Because they're going to try and reach out to other, car manufacturers and stuff, and they've already lined up partnerships with that. That's what they do. And so the question is, do they make any money? So their earnings, if you look at it from an economic profit perspective, the returns on invested capital in the most recent year was 15.2%. When you compare it to the cost of capital, which is 10.5, it means they are making money. They're making tangible money. The revenue and their growth rates, the recent earnings reports were very, very strong growth. So they're definitely making money, and they're definitely powering along that in that sense. And so that's a good thing that I want to see. In terms of their financial position, if you looked at their liquidity, their current ratio comes in literally almost 2.3, so they have almost 2.3 times as much current assets over current liabilities. So they have more than enough cash to sustain themselves over a long term. Their debt to equity, in terms of their debt level, they come in around almost a third, 0.33. So they have a very manageable amount of debt in their balance sheet, and the quality of their earnings, like their assets, almost about 25% are intangible, which is good. So the quality of assets, they have strong assets. They're not tied in very intangibly kind of assets. What are the risks facing the company? In terms of risks, getting talent, finding the right people. If they're going to be pushing in too much into getting into the AI sec, they need a critical mass of talent. The other side of it is the whole AI concept. Lots of players and lots of deep pockets. You got Google, you got, Amazon is even getting into it. You got Apple's going to be getting into it, Tesla. You got a lot of players with a lot of back pockets. And the other side of the risk too is again, this comes associated with a lot of companies, Chinese-based companies, is you have that government overhang. Right now, they have a very good relationship with the government, and pretty much they can get their own way in terms of doing stuff. And so, the government wants to get into AI. They're supporting companies like Baidu, so that's a good thing to happen. But there is always that risk if something, doesn't catch on or there's some disagreements. It's pretty easy for the government to cut them off pretty fast. So that is an overhanging risk with the business. Finally, okay, if you're looking at it from the perspective, okay, that's great. Seems like a pretty decent company. So is the stock cheap? So in terms of valuations, stock from various discounted cash flow valuations, stock comes in at between 200 to 245 a share. And if you're looking at it from a PE relative perspective, it's definitely lower than companies like Google. So it's a cheap way to play, the whole search engine concept, but it's also a cheap way to get into this whole AI, having some exposure to this AI technology, artificial intelligence technology. I bought in at 235, and then it went as low as 214, so I bought some more. So my average is about 227. So I think there's some upside on the stock. So I factored in, if you're going to look at Baidu, you have to look at it not so much from the perspective of the old Baidu. You have to look at it from the perspective of what it could potentially be in the future. And the way it's positioning itself is it's got a real critical mass of an infrastructure, an ecosystem that could potentially make it a really big player in the whole AI technology, and more specifically in terms of the AI in terms of self-driving cars, which is a real big push in China. So if they get the backing by the government to go ahead and do this stuff, they could be a really big player, because we're dealing with a country that's got 1 billion people in it who are very hungry to travel, to drive. So when I factor that in, with the essentially a captive market. It's making tangible wealth. It's growing very well and very healthy. It's got a very somewhat clean balance sheet, and the stock is somewhat undervalued, and I think potentially it could be worth more than 245 a share. I put all these factors together, and I thought, you know what, this might be a good opportunity to get in on the kind of the ground floor of this whole AI, artificial intelligence, robotic kind of narrative that's in play right now. So ultimately, that led me to decide to buy, and I took a small position. And if the stock were to fall further, I would probably go out and buy some more again to average down the cost. So that was my mind map. That's kind of my thought process that I went into deciding to buy some shares in Baidu.